I am so glad you convinced me that the family car should be the Defender 110. It is so beautiful inside. It's so comfortable, and it just feels indestructible.
Yes, it really is. I've been waiting a long time for the new model to come out. The Defender 110, I'm telling you, it's my favorite car of all times. It's my third one. You know, I have stories of going off-road. The guy managed the group. He was like, what are you doing in this beautiful car? I'm like, I'm going off-road. He's like, are you sure? Because you can use one of ours. And then they look like Mad Max cars. I'm like, no, we're going to do this. And he was shocked.
Wow. Well, it's great because the Defender has been reimagined for 21st century adventure, and its unparalleled off-road ability, as well as its robust interior, are invaluable whether you're headed towards uncharted territory or just a weekend of exploration. The Defender 110 tackles challenging surroundings with absolute confidence. The SUV conveys strength outside and in, featuring peerless technology like an intuitive driver display and an award-winning infotainment system. That's my favorite part, to keep you connected no matter where the journey takes you. Adventure is unique to everyone, and so is the Defender. Choose from the two-door Defender 90, the four-door Defender 110, or the larger Defender 130 with the ability to seat up to 8 passengers. You'll find uncompromising performance in all three. So pack up and go even further with the Defender 110. Learn more at LandRoverUSA.com/Defender.
Sometimes it takes a different approach to help you unlock your true potential. Capella University's game-changing FlexPath format helps you learn at your own pace and fit earning a degree into your life. From before you enroll to after you graduate, you'll be supported by people who are invested in your success so you can pursue your goals knowing that help is available if you need it. Imagine your future differently at capella.edu.
This isn't your average business podcast, and he's not your average host. This is the James Altucher Show. Today on the James Altucher Show.
I will tell you that when this is over, whenever that is, you will enter a changed world. Because remember, we live in a world economy. Like you may not speak German, but believe me, your wallet does. Okay.
Good quote.
But the point is, we have productive workers who should be producing. And the way we have shut the economy down is not the way an economist would do it. It's the way a virologist would do it.
When do people make that mathematical decision? Like, because there's collateral fatalities from, closing down the hospitals for other illnesses.
Yeah.
And there's collateral fatalities from every decrease in GDP.
So I can actually give you two really interesting answers here, because I'm both on the Federal Reserve and I'm also on the Board of Trustees of Washington University, which has one of the world's best medical schools.
So pleased to have as my guest today, Jim Mckelvey. He is, of course, the co-founder of Square, which he co-founded with Jack Dorsey, who is the CEO of Twitter. Square, you probably know it. You've probably used it a million times. It does the credit card processing for almost 25% of all the companies in America. It's that little thing where you attach to your iPhone and you can run a credit card through it. So huge business, multi-billion-dollar business. Jim's netted over $1 billion himself from this business. And for the purpose of this conversation, this might even be more important. He is the deputy chair of the St. Louis Federal Reserve. And of course, the Federal Reserve is pumping trillions of dollars of stimulus into the economy. I've been curious about his perspectives from both the Square side about how businesses are doing now, and also from the Federal Reserve side. Like, how does it all work? How does the stimulus get into the economy? What's going to happen? What are the dangers? What are the risks? What should we watch out for? What data are they watching out for at the top secret internal Federal Reserve meetings? The podcast starts with me going right into what he learned at the latest Federal Reserve meeting held that day. And so this was recorded on Thursday evening. Have fun and let me know your feedback on Twitter. Thanks. So we could keep this has been off the record. We can keep this off the record, but I'm just curious, why was the Fed meeting brutal? I mean, I saw the data, but I have questions about it. But
So it was the data. I mean, the analogy that they were using was that we knew we were taking a roller coaster ride, and we're about to go into the first terrifying drop, and it started. So we're in this sort of weird economic free fall where there's an expected pullout at some point, but it's terrifying when you actually see the data start rolling in, and so we saw the data this morning, and it was pretty dire. I mean, like, I don't know if I told you the analogy that almost got me kicked out of the Fed. Yeah, so Jim Bullard, who's the president of the St. Louis Fed, said this is like you're driving along at 70 miles an hour, and then you hit a construction zone, and you slow down to 20 and drive for a while, and then once you're past construction, you reaccelerate. That's his analogy for what the economy is going to do. And I said, yeah, well, it seems like more like you're in a coma and you're in the hospital, and the only good news is that it's not some sort of random coma. It's like the doctor induced a coma for therapeutic reasons. Like we were you had a healthy patient that had some other malady that they needed to induce a coma. So they've induced a coma, and you're now in a coma, and hopefully they'll pull you out when they want to pull you out, as opposed to most comas, which is sort of like, hey, you could be in there forever. So
I think your analogy is dead on, because if you look at what they're calling the stimulus package, you can't really stimulate a patient in a coma that's on the verge of death.
No.
Maybe you can provide a Band-Aid to stop bleeding so they stay alive a little bit longer. But for stimulus to work, you need people. You need an economy. You need people outside, going to stores and going to restaurants. And I'm not suggesting anything one way or the other, but you need an economy. You can't have everybody just going on Twitter arguing all day. That's not an economy.
No. That is what is it? What would that? We need a word for that. That's a bickery. Like
social anger,
snarkonomy,
social angst.
It's the snarkonomy.
On social media. You ever notice that the word social network, it used to be called social networks, where you would actually like, hey, Jim, let's be friends on social networks.
Yeah.
Now it really is media, where like it's almost like people broadcast their opinion to their specific opinion ghetto, and then everyone just argues, and that's it. So it really is social media instead of a social network now.
Yeah, and I would add that I think the social is in small print, and the media is in large print now.
Yeah. So actually, let's talk a little about the data, because I'm curious your thoughts, and then I want to kind of. So I'll introduce you after this. I'll give a full introduction on your book, and I'll mention how much the book has affected me. Which, by the way, Jim, I have thought a lot about your book since our first podcast, because, and I thought about our podcast too. The idea that you said, where if you're going to build a service where you're serving the bottom third in a particular market, that is such a great way to think about new business models in this day and age, particularly, this crisis aside, particularly as the bottom third in almost every, no matter how you define a market, the bottom third is having a rising standard of living. So it's such an interesting way to look at business models.
It's ironically, James, living through it again. I mean, Square is literally, as we speak, kicking out loans, which was not really a major part of our business. But we're doing these micro loans to businesses. In some cases, not micro. We're trying to be the rails to get all these companies, which, look, they're legitimate companies, but what they are not is they are not plugged in. So a lot of them don't have existing banking relationships. Some of them don't have payroll records. Like, a lot of them are businesses that work, but they're not in the system. And the system was never built for those people. And when they went into the banks said, we'll take a number behind, these 500 other companies that we're used to dealing with. And so none of those guys got money on the first round, or very, very few. I won't say none. I can't say none. But a shockingly small number of small businesses actually got the stimulus money that's now run out. But Square is now rapidly building the plumbing to enable these companies to have all that access. Hopefully, it's going to work. I mean, we're waiting for the government to fund us now, but we just got approved last Friday. But I mean, again, it's an innovation stack. It's exactly the same. Like it's funny because here I am eating my own dog food, and my company, frankly, without much of my guidance, did exactly what I said should be done, which is pick an area that was unserved, which is these little guys. Like, they can't get bank loans because they don't have banking relationships, and now hopefully with Square they're going to be able to. So,
Like, what's an example of a small business that doesn't have a banking relationship that you're able to help?
Well, I'm thinking. So when you say small business, I'm thinking of every every food truck that I frequent.
Yeah. All right, that's a good point.
And when I say banking relationship, do I mean they have a checking account at Chase or a BOA? Yeah, they might have a checking account, but do they know the name of the loan officer? Have they been in 15 times in the last 5 years to socialize? Like, the people who are getting the loans right now are the people who literally go to the ball games with the bankers.
Right.
And it's appalling to see the level of sort of insider baseball, if I can continue the analogy, that is being played because there's look, and I'm not blaming the bankers. Like, I'm not saying that, like, if I was a banker and I had a customer who'd been with me for years and I knew him or her personally, and his business was on the line, versus somebody I'd never worked with before who just happened to have a little checking account or maybe some sort of tiny relationship with my bank. Like, I'm going to give my attention and therefore the access to this loan to the person that I've been working with. So I'm not faulting the bankers for treating their best customers the best, but I'm just saying, in this situation, like, where you want the money to go is to the most endangered parts of the ecosystem. These are the smallest businesses.
Right.
And so
there's 28 million
Yeah.
small businesses in the U.S.
Yeah, and a lot of them are just not plumbed into the financial systems. So the good news is, Square's now been approved. It was Square
Approved as sort of like a bank, or approved as a processor of these loans?
both, actually. So we got our ILC. That was about a month ago. So we now kind of have this quasi-bank entity, but it's so brand new, we're not using it. We're actually partnering with the existing banks that we've been working with. So Square has connections with banks. So, like, the last thing you want to do is add another new thing in your chain when you're in the middle of running as fast as you can. So we're using our existing connections, but PayPal and Square and Intuit have all been approved as non-bank entities who can provide PPP access.
And will the Federal Reserve backstop your loans the same way they're doing for banks? Like, can you make the loan, take the service fee, and then instantly resell the loan to the Federal Reserve?
No, that's, we'd love to have that happen, but that's not how it works. So this is a program that the Treasury Department routes through the Small Business Administration. So unfortunately, the SBA to the government looked like the perfect vehicle because, well, they're used to dealing with small businesses. Like, where do we go for small business? Well, we have this part of the government called the SBA. Unfortunately, the SBA is a massively antiquated system and a lot of paper, months to apply for an SBA loan. Look, and again, I'm not knocking the system. It served its purpose, but you couldn't just scale that process up because there was too much paper and too much waiting and, too many just slow things. So all that had to be essentially retooled in about a week and a half. And the SBA servers crashed. Oh my God. They crashed 40 times in one day. Once for 4 hours, or over 4 hours, actually. We think it was more like 6. I don't actually know. It's somewhere between 4 and 6 hours. And on Monday, the servers just flatlined. And these were the servers that were approving everybody's loans in the E-Tran system.
Wow.
So, again, it wasn't built for that. The good news is that the electronic companies had better rails. So hopefully on round 2, we'll get it right.
Now, I thought the Federal Reserve had stepped in and said, we'll buy, because the banks were afraid to take the risk. So the Federal Reserve stepped in and said, look, you could sell us the loans at cost if you want after you make them.
That is for a certain type of loan. Yes, that is correct too. so the Fed's stepping in half a dozen different ways. They've had most effect where people have never even seen it, which are there are all these weird markets. Like you don't think, oh well, why should I as an individual care about like the bond market, or the currency swap market, or any of these things. And what you realize is that if those parts of the plumbing don't work, your toilet backs up. Like
Right.
it eventually
Well-
flows back into your house.
Like let's say for instance, corporate bonds crashed, and which makes it harder for companies to borrow money in the like they normally do in the normal course of business. Then other parts of the economy that might even be still open are going to shut down, and the people owning those bonds, their portfolios will go down in value, which might trigger bank losses or hedge fund losses or mutual fund losses, which trigger down to the everyday person. So they're all connected.
Yeah, and they're also mentally connected. I mean, what you just described is a legitimate sort of chain of reactions. There's also the emotional reaction when a market that always you just assume is going to function stops functioning. So I'll give you an example. Let's say I come home tonight and all the power's out at my house, and then I look down the street and all the power's out. I might run out and buy toilet paper. Right? Toilet paper has nothing to do with electricity, but the fact that the electricity, which is a thing I depend on, is not working causes me as a human to just panic in other ways. So like keeping these markets functioning is important, both because the markets need to function and also because if they don't function, then the panic effect is a ripple. I mean, it's sort of like the coronavirus itself. Like one of the things that kills people is this, we think, overreaction of the body's immune system, and sometimes the overreaction is actually more deadly than the pathogen. And so one of the things that the Fed has been doing, I think, quite a good job at is calming these other markets that no normal person needs to know, but just know that the Fed is there doing this. And I could look up a paper. There are probably 8 different programs that we talked about where they're interceding and basically saying, hey, look, we got this. Don't worry. And part of that keeps the economy functioning.
So the basic function of the Federal Reserve in this sense, when they adjust interest rates, is they buy the most basic government bonds out there and let these treasury bills, I forget what duration, and that everything ripples from there. So if treasury bills have 1% interest because the Fed's buying them enough to create that interest rate, then all other bonds and other, interest rate backed or interest rate focused assets are priced accordingly from that one thing. But now, because all assets are in chaos, the Fed has been what one would call moving up the curve and buying not just government bills, but let's call it mortgage-backed securities, potentially corporate debt, insurance on these corporate debt and mortgage-backed securities, and so on, so that people who have been invested all along aren't penalized because the government is saying, hey, we got to pause for a while.
Yeah, you don't want any part of the financial system to break, even if it requires a bit of unusual temporary buying. You want to keep those things functioning because it ripples through too fast if you let one part of it break.
Yeah, like in 2000, I think the lesson was learned like in 2008 when they broke the dollar, like money market funds started trading for less than $1. That created a panic, and the Federal Reserve had to open the window for commercial paper, which actually, and I know we're getting a little bit in the weeds, and I want to get it kind of into the bigger picture.
Yeah, we're destroying your podcast here. Like
no,
this has got to be killing you in some way. Because I know I can't even talk to my friends about this stuff.
No, I love it. The one thing, the very first thing the Fed did initially was they kind of quote unquote opened their window for commercial paper. Yeah. And I'm just, I think it's important for people to understand that some of these basic concepts. So is that what that means? I think, and you correct me, is that companies, on a daily basis, they need money for daily needs like payroll or buying toilet paper or whatever, and they borrow overnight, if depending on where their inflows of cash are coming from, they might not have the right amount of cash in the bank account. If they're a multi-billion-dollar company with branches all over the world, so they go to the bank just to kind of keep things smooth. The bank usually gives the money at like 0 point whatever percent interest, and they pay it back the next day. But the banks stopped lending because there was worries about liquidity. And what does it mean that the Federal Reserve opens up their window to satisfy this so-called commercial paper?
So, I mean, the discount window that you're referring to is used for the Feds to actively encourage banks to borrow money at ultra low interest rates. That just basically makes sure that there are funds in the banks. Okay. So if you want a sort of list of the programs that the Fed has been working on in the last week, it's bond purchases where they purchase a range of mortgage and government bonds, and that keeps the rates low for those for those instruments. Then there's something called repurchase agreements or repos, and the repo market is a key piece of the financial system's infrastructure, and it's sort of arcane, so I wouldn't stress about it, but it's working. Then there are reserve requirements that it basically makes financial institutions hold a certain amount of reserves, so they've been lowering that. Then these. And I know we're really esoteric here. Then there's these things called swap lines. Okay, so because of the importance of the U.S. dollar in the global economy, strains in the market for borrowing and lending overseas can also screw up financial conditions in the United States. So, like now, you get the cold from Germany. That's the way to think about it. So, what the Fed does, the Fed and the central banks around the world agreed to reduce the cost on international dollar swap lines. So it's making this more efficient, and that helps other central banks control their dollar funding pressures. And it basically keeps the whole world economy liquid. Because remember, we live in a world economy. Like you may not speak German, but believe me, your wallet does. Okay.
Good quote.
Yeah. So and then there are things called credit facilities. Okay, so in a time of crisis, what the Fed does is they make available funds in the financial system through what are known as emergency facilities. So you should think of these as like warehouses of money that are earmarked for specific purposes. Usually, like purchasing existing debt, or to make sure that borrowers have access to refinance debt. And so what the Fed has done is they've actually revived several old facilities that they had. So they, stuff from 2008, they dusted off that, and then they've created some new ones. I mean, I could go on. They do small business lending, and then there's the discount window. And the discount window is the one where basically banks can borrow at really low rates. So I mean, and that's just the stuff that the Fed's doing that nobody talks about because it's too esoteric. The two big things that the Fed is doing is one, the federal funds rate, which everyone talks about, 0 to 0.25%. Okay, so that's the big one. That's the thing that everyone talks about. The other thing, and this is really important, and this is, by the way, new. There's something called forward guidance. And I don't know how geeky you want to be on economics, but
let's go for it.
Okay, so let's go for it. If you think back to 2008, 2009. The Fed sort of lowered the federal funds rate to at or near zero, and they were expecting economic activity to pick up, because the idea here is, we just made money really cheap, so people will borrow money and start businesses, okay? But it didn't happen, right? And they were like, why the heck isn't it happening? Our rates are low. And the basic reason was because the market said, well, you're not going to trick us by, giving us this low rate this month, and then as soon as we start investing, we expect the Fed to jack up the interest rate, and we're, in these 15-year, 5-year, 10-year deals, and our interest rates go through the roof, and so we're not going to do it. So the market didn't respond. So for the first time, basically in history, the Fed gave something called forward guidance. And this is where the FOMC, that's the Federal Open Market Committee, publicly communicates its long-term plans to how a policy is going to evolve. So it basically gives households and businesses confidence that the Fed is not going to have some sort of gotcha later. All right. And so this is actually one of the most powerful tools the Fed has. And you're seeing the chairman use it. You're seeing the reserve banks use it. You're seeing this it's talk. It's basically saying, I got your back. and you can trust me, and look at how we've behaved in the past. And, Jay's been pretty good about this stuff, so people trust him, and that's actually having a lot of effect. And people never understand that one of the great tools of the Fed, which is, it's basically a brand new tool, brand new basically being in the last 10 years, this forward guidance gives you the ability to move markets even without having to change your interest rate. So it's kind of like, sort of like a head fake, like, not that they're faking it, but like just, it's like when I can control my son's behavior by giving him that look, like, don't touch that, or don't, like, I know what you're about to do to your sister, and you know what I'm going to do to you if you do that to your sister, so he doesn't do it to his sister, right?
Well, and I'm thinking I'm thinking of an analogy, like, think about 2003, where you have all these subprime borrowers borrowing at the ridiculously low rates that were available to them then, not realizing that the Fed was about to start raising rates considerably, and they would have to pay interest payments at the much higher rates, and that's what created kind of the subprime crash later. But now just much expanded. So instead of subprime borrowers, we're talking about huge companies and banks and countries, and we're giving guidance on that.
Yeah, you're essentially, what you want to do is you want to have actions that are taken by the central bank reflected in the economy quickly. But that requires trust, because the Fed, like, who banks at the Fed? Like, none of us, right? Banks bank at the Fed. So it's like,
Right.
So but like, who cares what banks do? It's really what people do and what businesses do. So you have to sort of move this action that's taken at this, sort of esoteric central bank level, and move it out onto Main Street. Well, how are you going to do that? And it turns out that one of the new tools is this forward guidance, which is really powerful. And it's also one of the reasons that the Fed chairman has one of the worst jobs in the world, because if they, so much as sneeze or scratch their nose, sometimes the markets will go crazy. So you just like I would not want Jay Powell's job. I mean, because the poor guy, and by the way, Jay Powell, he's a wonderful man. Like, I once spent, I had breakfast, lunch, and dinner and breakfast with him, and like, it ended 24. And you spend so much time with the guy. You start talking about family, and then you start, like, he's got a great sense of humor. Like, he's a funny, cool guy, and like, you cannot have a sense of humor at the head of a central bank, especially right now. But like, I felt sorry for him, because he's clearly an entertaining, animated, fun, guy that you like to have a beer with, and boy, he doesn't get to show any of that.
Right, and right now there's so much uncertainty in the world, and he's kind of we're the world's largest economy by far. He's got to navigate that, and it seems like with this stimulus package, there's two broader questions, which is, one is, where does Congress end and the Fed begin? And also, it seems like the stimulus this time, as opposed to 2008, is broken up into short-term, medium-term, long-term. So short-term are these direct deposit stimulus checks, $1,200 per adult. Then there's medium-term, which are like these SBA loans. So once the economy reopens, hopefully furloughed workers will come back, and there's money in the economy. And then long-term is the traditional Fed stimulus, which tends to take, as you were even referring to, it tends to take 12 to 18 months before society kind of trusts that, interest rates are low. There's not going to be quick inflation, and we start piling back into a normal economy. And I've never seen this kind of short, medium, long-term stimulus done before, but of course, this is a very unusual situation.
Yeah. I mean, this is completely unprecedented, and we've never had a recession that was intentional up until now. So the economy was fine, and then for health reasons, we decided to basically create a recession, basically stop everyone from working and interacting. But that's never been done. Like, it's just never been done. So we're completely new territory here.
So what do you think? Like, what do you think? Let's even start with just the short-term stimulus, the so-called UBI. It's not really a UBI, but just the direct checks going to everybody. Right now, everybody's at home. So they're just going to buy. They're going to buy food with it, but it's not like everybody's planning vacations now with this money. It's just a survival mechanism to keep people at home.
As an economist, I scratch my head on that one. Because, I mean, is that really how you want to get the money out? And it's a lot of money, and it could probably be routed better. But, okay, so as a microeconomist, I guess I'll say that. As a macroeconomist, I will say this, shoving cash into the system, even if you don't do it efficiently, is probably a good idea. Okay.
Right. Is there a moral hazard at all? Or at every level of this, I'll ask that, but
probably not in a dire situation.
Okay.
Moral hazard.
People needed the money.
Yeah, I mean, look, there is definitely going to be some misallocation of this money, and there is going to be some outright fraud. Okay. But even that, to a macroeconomist, as long as the fraudsters go out and go to dinner, when the thing's over, it is still money into the economy. So, and I actually had an interview for an hour last night with one of the heads of the St. Louis Fed Research Department, talking about all these issues. And I asked him this, straight up. It's like, do we have to be precise at where we, try to water the plants? And he said, not really, So yeah, that stimulus is going in. It's probably not well targeted, and I don't understand why it was done, but it's done.
Well,
yeah,
the average
so
American has $400 cash in the bank. They need to buy food. It seems like for just basic. It almost seems like this is a check to pay people to sit at home rather than a pure stimulus.
If that's the case, then I'm totally good with it. If you're telling me that somebody doesn't have money for food, for God's sake, let's give them the food and get them to stay home.
So where I get worried about fraud, but to your point, on a macroeconomic level, it might not matter, is there's these small business loans, the PPP loans, the payment protection loans, where you could own a restaurant and get like a $50,000 loan, which is 2.5 times your monthly payroll. And then you could decide, you know what, I'm not going to reopen my restaurant anyway. I'm going to just keep this money and I'll pay it back in whenever. But to your point, they'll still spend the money in the economy in some way. And that's the worst fraud I can imagine on that particular package. But it's from a macroeconomic point, it might not have immediate help for the employees who are laid off, but it'll still get into the economy, the money.
Yeah. And I mean, look, it's a tragedy. You don't want to give loans to people who are doing stuff like that. On the other hand, it's going to happen. And you can't really, it's like anything else. If you want to police it really carefully, you're going to end up excluding a lot of people. And if you're willing to have some bad behavior, then you can have a more open and nimble program. Given the severity of the crisis and the speed at which we wanted to react, because we wanted people to stay home, I think there was a higher tolerance for misbehavior. But yeah, it's certainly going to be there. And look, we're going to have a lot of fun pointing fingers at people when this is over, saying, "You idiot! You should have known that," and then fill in the blank. And what I say to those people is, I know very few bad people, and I've got some friends who are,
they're in jail.
Yeah, I mean, I do. Prison, not
they
jail,
kill people.
Prison, but but I'm just saying, like most people are generally reasonably good, but and especially if you're in a decision-making position right now, you have very limited information to base your decision on. You have high amounts of pressure and a hyper focus on your actions and their results. And you're like, I mean, this is, I guess, what I sort of talk to in the book. Like one of the reasons startups tend to evolve better innovation stacks is because they're not in the public view. Like, this stuff is a messy process. You're going to make mistakes. You're going to have to correct. You're going to have to do all sorts of stuff that doesn't work and find out that it doesn't work and then quickly correct. And that's just not a process that should be, heavily papered by attorneys.
Right.
Like, you just want that stuff happening quickly, probably without a lot of public oversight at the beginning. Just because if you ask every question and you listen to every potential problem, then you're never going to do anything.
Right, but I think though, looking at like even that situation of fraud from a macroeconomic level, your concern right now is just making sure the economy gets back up and that there's not deflation and that there's not hyperinflation. It seems like in order, those are some of the Federal Reserve's goals. And then the next level is you want to make sure there's not too much moral hazard, but it doesn't seem like that will take place with these small business loans. But with the unemployment insurance, I'm curious what you think about the fact that some people on unemployment, and by the way, I'm in favor of all of it, but I do think what happens to the people who are on unemployment who are now making more than they were making at jobs? Is there a chance that the employment sector gets too heated if the economy comes back too strong too quickly?
Yeah, I mean, there is that danger, and that's that's like saying if I make my Tinder profile too good, I'll have too many dates. Like, yeah, it sucks, but it's sort of the problem you want to try to create. So if we ended up overheating the economy and causing inflation, we have really good tools for handling that. That's a known problem, and there are probably known solutions. Now, will those solutions work in the new economy? Because the economy is going to be different when this comes out, when this is all over. But, most likely that will be something that is, that's a problem. Your social profile got you too much action. Okay, you got a different class of problem there,
Oh my gosh, I love these clothes. Mizzen and Main. That's Mizzen and Main. It really is the most comfortable work clothes. Travel clothes. I had to travel this whole week. I'm traveling for a week and a half, and I just took Mizzen and Main clothes with me. Close out 2023 in style with comfortable, breathable, packable, and machine washable pieces from Mizzen and Main. As you wrap up your year-end goals, enjoy a Mizzen and Main dress shirt that you can wear confidently. I like that they've very, very just nice, solid colors. I don't really like to get all fancy in patterns and everything, although they do have some pattern shirts, but very comfortable clothes, stretchable pants. It's just super comfortable, but they look professional, and you can wear them casually or professionally. I like some of their flannel shirts or untuck shirts. I love untuck. I never tuck in. So again, whether you're shopping for a special someone or giving yourself the gift you really want, I just buy myself gifts. Mizzen and Main is the perfect gift for any guy who works, travels, and or cares about looking and feeling great. As you could tell by my many photos across the internet, I care about looking fantastic. I'm practically a model. And let's be honest, every guy loves to look great. So again, shop now at mizzenandmain.com and save 20% when you spend $130 or more using promo code James. That's promo code James at Mizzen and Main, Mizzen and Main.com.
These days, we're all investors, trying to be smart with our money despite our worst impulses. But at iShares, we believe that deep down inside of every investor is a better investor. One that's just waiting to be let out. Explore iShares ETFs and insights and let your best investor out. Visit iShares.com for more information.
You know what I love about fantasy sports is that even though I'm not going to be a great basketball player or a baseball player or a football player or whatever, I feel like I get to participate and make decisions and use my knowledge of these different leagues or these different sports to compete. So it's like I can pick my team or I can pick my favorite players, and I could use my knowledge to make predictions and maybe even make money.
So with the basketball season here, you can now pick combo projections across football and basketball from the Specials League on Prize Picks. This is a league created specifically for combo projections that include two or more players from different sports or leagues. Want to play alongside some of Prize Picks' favorite players like rapper Meek Mill and comedian Andrew Schultz, who's also been a guest on this podcast, and I've been a guest on his? You can now find community plays under the promos tab of the app to view entries for some of the biggest names in the Prize Picks community each week. Look, Prize Picks even offers a reboot policy so that your entries stay in play even if one of your players gets injured. For football and basketball games, if you have a player who exits the game in the first half and does not return in the second, that player is rebooted. Prize Picks is the only daily fantasy sports platform with an injury insurance policy. What? So, I love playing it. I love anywhere where I can use analytical ability with my interests to demonstrate some skill and maybe make some money. And I like the game-like aspect. I do wish they had chess as a category on prizepicks.com, but I'll set up for what they've got. Maybe I should make my own fantasy chess league. But in any case, I love Prize Picks. Go to prizepicks.com/James. Use code James for a first deposit match up to $100. That's the easiest $100 you're ever going to make. So that's prizepicks.com/James and use code James. Daily fantasy sports made easy.
So let me add up the numbers a little bit. So there's 2.1 trillion or 2.2 trillion in the stimulus package that was passed by Congress, and that gets handed out through the economy, and ultimately we pay for it either through some combination of tax revenues and borrowing more money from I personally think the U.S. can probably sell 100-year bonds at very low interest rates, but who knows what mechanism will be used to borrow and pay for that. And then that's when the Federal Reserve clicks in, and let's say there's a $4, $5, $6 trillion of Federal Reserve money going in, and it doesn't just go into the economy; it also comes back to the Federal Reserve. But leaving that aside for a second, you have trillions of dollars going into the economy, and then just on a basic level, there's something called the money multiplier effect, which I'm sure comes up in your discussions, which is that every dollar into the economy is passed around 3, 4, 5 times or more. Like if you buy a newspaper, the newspaper guy buys a donut, and now the same dollar
we call it the velocity of money. That's the technical term. Yeah.
Right. So like a dollar put into the economy could have a $5 effect on the GDP that year. So because it's just passed around depending on the velocity. So with let's say there's $5 or $6 trillion additionally in the economy, and it's a $20 trillion economy. Could we be looking at over the next year like some outrageous amount of growth? Like what's a best case and worst case here?
Well, I mean, a best case is the patient's in a coma, and you just shot her up with a bunch of steroids, and she gets off the table and opens a Zumba studio, because she's just so pumped up on this stuff. God, I really should not mix analogies like that. You might, yeah. We'll see if
I'm going with it.
We'll see if Jay the engineer saves me on that one. But okay, so best case, you've overstimulated the economy. It wakes up off the table, like some tranquilized tiger that you didn't give enough sedative to, and tears up everything. Yeah, that's possible. But again, I think that's the too many Tinder dates problem. That's one of those problems that, boy, if that was the outcome, a massively overstimulated economy, where it felt like the entire economy was on meth for a week. Meth is not good, but boy, that first week is probably pretty fun.
Stated with experience.
Yeah, I do live in Missouri, but no firsthand experience. But to to sort of back it down a ways, we hope that that's right. Like the reason the $2.2 trillion, which is the number you first cited, is the target number, is because we're expecting a 40% decrease in economic activity, and the U.S. economy does basically $5 trillion a quarter in activity. So you lose 40% of that. That's $2 trillion. So you're sort of taking it out in one hand with one hand and shoving it back in with the other. But look, these are 7, 8, 12, 15 variable equations. Like nobody really understands how this stuff works.
Right.
So I mean, just to give you sort of one head scratcher, like the U.S. dollar is the reserve currency for the world. So when something goes wrong, and let's say it's a problem that we've caused. Now, I would say the U.S. did not cause this problem, but let's say it's like just totally the U.S.'s fault. And that, normally in an economy, if your country screws up, the world economy punishes you. Okay? That's what happens in, Singapore. Like Singapore screws up, Singapore dollar gets a beating. Like that's how world economies work. Unless you're the U.S., okay? So when the U.S. screws up, everyone goes, oh, crap, we're in trouble. We need to buy more dollars. Because instead of the dollar, getting cheaper, it gets more expensive because all of a sudden there's more demand for it worldwide because it is the haven of safety for everybody. So, I mean, boy, does this kill the economists at the Fed because, you try to have monetary policy and then all of a sudden it doesn't work. And why? Well, it's because, you're lowering, you're okay, give you a simple example. I'm sorry, maybe not a simple example, but close your eyes and just imagine if the Fed wanted to slow the economy down, what it would do. It would raise interest rates. Okay, so how does that work? Well, we're paying more money for interest on dollars. So you save $1, interest rates go up, that dollar will earn more. Okay, so now you're expecting that to slow down the economy because people can't borrow because now dollars cost more. Oh, wait a second. What happens is all these foreigners see that the dollar's paying more interest and they start buying dollars. So now there's more demand for dollars. You're essentially counteracting the monetary policy with fiscal policy. So all this stuff just like there's just no clear there are no clear rules. And I mean I don't want to sort of knock the folks that I get to work with, but I will tell you that these are brilliant people who spend the better part of their adult lives studying these behaviors, and they are apolitical. They're not Republican, they're not Democrat, and yet they come out of these meetings kind of going, well, we think this is what we're going to do, but the important word is think. Okay, they're not certain, but they are thoughtful, and these are intelligent, well-meaning people. And I actually love the fact that I get to sit in this room. As a matter of fact, I'm almost being punished for a wish that I had. I don't know if I told you about this during our interview before, but when I was sitting there talking to Herb Kelleher, the founder of Southwest Airlines, he's on his second pack of Cool Menthols, and we're having just this great old time down in Texas, and we're not just talking about my book. He's talking about Southwest. He's telling me about the time he was chair of the Dallas Fed during the 2008 financial crisis. And I was just thinking, oh man, God, that must have been cool. Wow, you're the chair of the Fed in the biggest economic upheaval in the last 50 years. I was like, God, that would have been so cool. And now here I am, the deputy chair of the St. Louis Fed, and we've got an even bigger problem. And I was like, oh man, like if Herb was still alive, I would call him up and go, dude, I'm so sorry, because it was just a thought that was in my head. Like, it's these are scary times, and nobody knows. But I will tell you that the people who are making the decisions are the right people. Like I would not, I don't have any sort of individual criticisms with any of the people that I work with at the Fed, and that is a very rare statement for me because in most of my organizations, I got some people who are like, "Oh, that guy's got to go," But I'm just in awe of some of these folks.
And so let me ask some basic questions, and because I agree with you, there's so much uncertainty, it's hard to really know answers, but I'm just curious what the thinking is on them. So let's say the economy opens up pretty quickly and people go back to work, and the 2.2 trillion has a fast faster velocity, that, it's spent more than people thought. Is there any danger ever of hyperinflation? I'm always asked, what do I think of this package? Is there a risk of hyperinflation? So what's the basic answer?
The basic answer is we've seen no evidence of that. And that's the economist's answer. And I'm sorry to have to give you the economist's answer, but I have to give you
That's
that
okay.
because there are evidence of hyperinflation in economies where they're not a reserve currency and they start jacking around with the money supply. So Venezuela, whoo, Argentina, whoo, Weimar Republic, whoo, you got examples, plenty of examples through history. But now you're back to the fact that the U.S. has the reserve currency for the world. Okay, there tends to be a damping effect on the on inflation. And we don't fully understand this. So I will say this, that one of the questions we've asked repeatedly at Fed meetings is why couldn't we hit the 2% inflation target? Like, we got interest rates really low. The economy's doing really well. We should, we have employment at a record high. This was before.
Yeah.
Notwithstanding the last 5 weeks, but before that, why couldn't we hit the 2% inflation target? Why couldn't we? You have the most powerful central bank in the history of the world trying to create inflation and unable to do so. So when you say, well, Jim, could there be hyperinflation? I'll say, of course, yes, there could be. But then I'll say, I don't understand the mechanism right now where that would be possible. But of course, we're in new times, and who knows what's going to happen. And I could certainly show you an equation where that is the result. But again, James, a common problem that I suffer from as an individual is I tend to think of the economy like my bank account. I think, if I save, then I have more to spend later. And if I, am irresponsible for my money and spend it all, then I'll be broke. Well, yeah, that's not how the Federal Reserve works. It's just they don't go broke, and the national debt is not like your credit card debt. And these are complicated relationships, and it just doesn't work quite like that. But unfortunately, the model that I have in my head is, my Visa card balance. And it's just not the same.
Right, because and just to explain, people always say, "Oh, the Federal Reserve is printing money." It doesn't quite work like that, right? If you open up the discount window to buy one-day loans, you're putting out $1 trillion, but then you're getting the $1 trillion back.
Yeah, it tends to go and come very quickly. Now, what you don't want to have ultimately is dollars that are sloshing around that don't mean anything, So there is this trust in the currency that's important, and again, back to that the signaling that the Fed does as an important function of giving forward guidance. That's an important thing. But as long as there's trust and as long as people don't freak out, then yeah, we're pretty good with it.
What about if China, there's all this tension now between the U.S. and China on a variety of levels. What if China says, you know what, screw it, we're selling the debt we have with the U.S. and we're going to start lending to the EU instead, and we're going to try to make the EU a reserve currency.
Well,
is that a risk?
Yeah, sure. Now let's talk about how they're going to do that. Well, where are you going to dump however many $1 trillion of U.S. debt they have, and how's that going to change the U.S. dollar? So the dollar gets cheap, so all of a sudden China's exports become super expensive, and their economy goes to hell. And sorry. And we're only 3 variables into the equation there, and I've already blown up the Chinese economy. You got a 20 variable equation here, and this is, without Europe's reaction. Oh, and by the way, you got, currency speculators all over that are, sort of gaming the system. Soros isn't dead yet. He played the British pound for $1 billion about 20 years ago. Like
Yeah.
he's got all his disciples are still out there. Like these guys are these. It's again, you can't think of countries like individuals. You can't think of like you hate your neighbor. So you're going to let your lawn go to hell. As I see here looking at my lawn right now, I'm kind of like, well, maybe I hate my neighbor because I haven't cleaned up my lawn in a couple of weeks. But the point
You're
is,
projecting.
yeah, I mean, the point is like, countries aren't like that. I mean, they're kind of like that, but not really. We're so interconnected, and maybe this is the big thing that people ought to get to understand. Like, you live in the world. Period. You may never see any of it. You may never visit it, but it's there. And if you don't think that a disease that starts in a little, area of China is now a worldwide problem, well, you're wrong, because it was, and that's partially because of the physical interconnectedness of the world. But the world is just as much, if not more so, electronically and technically connected. So, this whole thing about like it's an American car. No, it's not. Like, half these parts are from overseas. And half of the parts of those parts are from overseas. And, maybe I know it's comforting to think of sort of simple models, and you have to have simple models. But simplicity at some point destroys information. And,
Well, let me ask this in a different way. Let's say, what would have happened if this panic had never happened, right? The economy was smooth and as it was 2 months ago, and Congress passed a $2.2 trillion stimulus package. Then what's the bad thing that could happen when you pass a multi-trillion-dollar stimulus package and the Fed cuts rates to zero when the economy is already fine? Like, what would have happened if there was nothing to repair?
Well, we might have hit our 2% inflation target. I don't know what else to say. You do that, there would probably be, okay. So then I hate to sort of be a jerk about this, but like you got to tell me how the stimulus package is. Okay, so we got $2.2 trillion. Are we investing it in infrastructure? Like, does the U.S. sit there and say, hey, look, our bridges and roads and internet and everything is deteriorating, and we're going to rebuild that? Well, actually, that might be good for the economy. Okay.
Right. I see.
Do we just purely fund consumption? Well, that's probably less good, or maybe we fund, a war. So we're actually destroying infrastructure. Oh, that's probably bad, So, you got to tell me how we're spending it, because we have spent $1 trillion blowing shit up, and it doesn't usually go well.
Right. So, okay. So in terms of the economy, well, how long can the economy remain closed the way it is right now? So I think the stimulus package maybe lent us a month or 2 months. I don't know. That's just me guessing, just because I see, I'm like you, I'm invested in a variety of businesses. I don't have the full access and exposure you have and all that, but I see small businesses and storefront businesses, in a lot of pain right now. And I'm sure you see you obviously see all the data I see just on my street. And I'm a small business owner as well. I own a comedy club, and we're a storefront business.
Yeah. And a comedy club that's closed right now.
Yeah.
Yeah. And I own a wedding venue.
I
own an event facility, and we're keeping all our staff, but that's only because we got lucky and kind of I'm supporting people, they just happen to work for somebody who was in a personal position to, sort of pay some paychecks. And we are actually applying for the PPP program, because that's what it's for.
Sure.
Yeah.
Sure. And so the PPP program, from my perspective, seems like it will help for a month and a half. I know it's 2.5x payroll, but there's other expenses that businesses have. You can't defer rent forever. And, if you're a restaurant, your food goes bad and so on. So how long do you think, some economists and some other professionals are saying, oh, we need to stay closed for 18 months until there's a vaccine, which to me sounds ridiculous, but I've been more in the camp of a month But what do you see from the Federal Reserve side?
So I can actually give you two really interesting answers here because I'm both on the Federal Reserve and I'm also on the Board of Trustees of Washington University, which has one of the world's best medical schools. And we developed the SARS mouse. So for those who care, SARS, which is sort of what sort of what we're dealing with on COVID-19, to test the vaccine, we developed a mouse model that you test the vaccine on. And the mice they're St. Louis mice. Like all the mice are Cardinals fans. Like if you're going to test a vaccine, you're going to test it on a little Cardinals mouse. And so I, this week, gave a bunch of money to WashU to accelerate their testing and their mouse models and a vaccine trial. So I'm going to give you two answers, one that you didn't ask. And that is, I just 2 hours before speaking to you, got off with the head of the medical school and the very researchers who were doing this work. And the good news is that we have a mouse that we think is going to be ready for production or ready for testing for human vaccines very, very quickly using this really clever technique where we don't actually have to even raise the mice. We don't have to raise a new generation of mice. We can actually go and sort of re-engineer existing mice, which is wonderful. So that will allow vaccines to be tested in a way that you just don't want to do on humans. Okay, whatever your thought of animal testing is, I'd rather lose a mouse than a neighbor. So there's some good news there. There's some more good news, and that is the Zika vaccine was developed at WashU, and the people who did that have already gotten some of the Zika tech to go towards coronavirus. So there's some help. And I asked the guy who was doing it, the actual person who built all this stuff, the actual scientist. I've spoken with him this afternoon, and I said, how quickly? And the quickest they're expecting 18 months. Okay. And that's with everybody pedal to the metal.
Well, and that's because it takes 12 months just to test for safety on humans.
Yeah, I mean, and thank God we got this mouse. Otherwise, it would take 2 years. But so I mean, like, this is good news, folks. But it does not mean that we're going to have sort of a shot you can go to get clear. The most promising thing is rapid testing. So what we have right now, from an economist's perspective, so I'm going to get back in and answer the question you really asked, which is we have tens of millions of healthy employees, healthy workers who should be out there doing their stand-up sets, okay? Like
those are not your healthiest workers, but I get the point.
It's true. I mean, but dude, like if there's any time for somebody like you to grab a mic and make a guy like me laugh until he wets his pants, like please do it now.
Just call me every time you leave a Federal Reserve meeting. I'll have jokes prepared.
Yeah, it's great. I mean, I didn't think it was a coincidence that, a decade ago marijuana was illegal and now dispensaries in Illinois are considered essential and are staying open. Like,
right.
Have some fun with that. But the point is we have productive workers who should be producing. And the way we have shut the economy down is not the way an economist would do it. It's the way a virologist would do it. The way an economist would do it would be to incentivize testing, so that people who made tests made billions of dollars. And so you have a lot of entrepreneurs making tests and building innovation stacks about testing. And you're going to get some novel, crazy tests out there. But one of them is going to work really well. And then once we have testing, then we have the ability to, sort of semi-reopen the economy. So your question, which was how long can we stay in a coma and then get off the table? The best guess right now is that as long as we can continue pumping stimulus in, that we will be groggy but sentient when we want to wake up.
I guess what I get afraid of is, and because there's so much uncertainty, there's not, I appreciate that there's not really an answer, but what I get afraid of is after a few months, essentially every small business will just throw their hands up in the air and we're going to come every month that goes by. The new normal is going to be another, standard deviation different.
Yeah.
And then nobody knows what that looks like in 3-4 months. We're going to come back to an economy that's just, run by online delivery and that's it. And then basically everyone's going to have to start new businesses.
Yeah. That's the terrifying prospect. And I mean, I can sit here and guess like anybody else what might happen, but I have no reason to make better guesses than anybody else.
And so when you said you had a brutal meeting earlier, so today the data was, just because people will listen to this in a few days, today the data was there was over 5 million of new unemployment insurance claims, and also housing starts were 22% down, and then retail sales are down across the board except for maybe groceries. And all of that is scary, and all of that is record breaking. But at the same time, correct me if I'm wrong, some of those unemployment numbers, because of the new rules of the stimulus package, some of those are part-time workers, some of those are self-employed, so they're getting a paycheck, and a lot of them are furloughed workers. So the sooner the economy opens, furloughed workers translate right back into employees fairly quickly.
Correct. It is not typical unemployment numbers in any way, either by their magnitude or the way they're actually counted. We've changed both things simultaneously. Yeah, this is not a controlled experiment.
Right. There's no other country that's just dying right now.
Yeah, well, I mean, kind of Sweden. Sweden seems to be doing the herd immunity thing, and my wife is Swedish, so we follow that pretty quickly or pretty closely. But
well, it seems like that model's working. Like their curve doesn't seem to be that much different than our curve. And do you think? And I'll get back to the economy stuff in a second, but do you think that could have been a viable alternative for us, or even now? Like if we reopen the economy now and try that?
No, I don't think so. In the United States, look, stuff works. Socialism works in Sweden. It doesn't work here. Okay,
right?
Like it's just not. We're a different sort of group. Group behavior is different. The way that people think is different. The way their news works is different. I mean, you've got so many different things in Sweden. It's just totally different.
There's also a natural social distancing there. Like they're not as touchy-feely.
Oh my God,
and
yeah.
There's no cities like New York City, which is has this germ-filled subways and so on.
Yeah, you don't hug anyone named Magnus. So I would say this. We don't have a test case here, so we just don't know. We're hoping that it's going to work out, but almost certainly businesses are going to be destroyed, and people are going to find themselves in very, very changed circumstances. Some people will be relatively better prepared for that, and that's sort of this weird thing that I've been noticing is that sort of the focus of most of my work, at least research-wise, have been on this sort of crazy class of people who end up solving new problems. And those folks are, at best 2 or 3%. If you look at most of the people in the world, they're doing things that have been done before. They're known, if you're an attorney, you can be really creative as an attorney, but you're basically following the rules that the attorneys follow. And if you're opening up, small businesses, you're probably going to follow those. And I made this study of people thinking that nobody but a small percentage of people were ever going to be potentially interested in the stuff that I was looking at. And now the whole world's there. And even if you don't think you're there, even if you think your business is safe, I will tell you that when this is over, whenever that is, you will enter a changed world. And we may not have people like right now, I really want to go out and socialize. And like if they released everybody today, I think you'd have the Iceland effect, which is like Iceland has, terrible winters, so everybody stays inside. But then when it's summertime, they party their faces off, right? But what if after a while we just all become hermits? Like what after a while? What happens after a while when you just get so used to the new normal? You kind of go, well, I actually don't really want to go out anymore. Like I'm just so happy with Netflix and Tiger King and these phone interviews that I'm just never going to go to James Comedy Club anymore. I'll just set up a webcam, man. But you're never going to sell me a drink.
That's definitely partially at least partially going to happen. My worry is every month this continues, partially turns into probably.
Yeah, it does. It does. And unfortunately, James, nobody knows what the coefficient is. If we knew, we could sit there and make a decision and say, well, I'm sorry, we're going to have to let a bunch of people die, because if we don't, more people will die because the economy will be completely trashed, and that has known health effects as well.
Well, yeah,
But we
right.
just don't know.
So when do people make that mathematical decision? Like, because there's collateral fatalities from closing down the hospitals for other illnesses,
Yeah.
and there's collateral fatalities from every decrease in GDP.
So I have not seen the economic data on that, and I would say that I would bet with all the research that's going on at the Federal Reserve and other economic think tanks that people are trying to ask those questions. But again, I don't think those are. I mean, those are very, very uncomfortable questions. And I have a 93-year-old uncle, and he's in the hospital right now, and I'm really worried about him. And I don't think of him as a statistic. Although if I told you, well, there's a 93-year-old man, who's in the hospital right now with pneumonia, you'd pretty much say, oh, SARS, or COVID-19, But what you just talked about is a calculation that can be made, but it is way above my pay grade to think about that. I can sort of state the problem, but I would not feel like if it's not manifestly clear to you right now. I'm really good at making obvious decisions. It's the subtle ones where you can't know that, I guess and go, and I'm frequently wrong. And I would hate to say right now that it's time to reopen the economy, because a lot of people will die. And the herd immunity that they've got in Sweden, look, Sweden's got a way better healthcare system. Sorry, they do, Now, I would say that, St. Louis might be okay, because I think our hospital system here is actually going to handle the peak next week, like it's supposed to. So great news if you live in St. Louis. Sucks where you are. Like, I've been to your house. Like, you don't want to get sick right now.
No, I definitely don't. But it seems like New York City handled, the I don't know for sure, because but hospitalizations have been going down quite a bit in the past week or so. And it seems like the healthcare system, it seems like we succeeded in flattening the curve. Although in terms of not overwhelming the healthcare system, like New York City's returning the ventilators.
I'm super proud of the doctors. I mean, like, I know some folks who practice in that area, and oh my God, they're literally heroes, because you're walking into a situation that could literally kill you, and doing your job every day. So yeah, look, there are going to be a lot of heroes from this. That said, I don't know. I'm not the guy to have an opinion on when to reopen. It's not an obvious enough decision for me to have an opinion yet. Most of the stuff I say is obvious.
Right, and I guess the real issue is that we all have to be comfortable with living with uncertainty here, because it seems like the basic outline of the problem is that for every month, something else will change in the economy, probably to the negative or sideways, best case. And we just have to figure out how many months can we tolerate that, and how many months can we fund either through congressional stimulus or Federal Reserve tools.
Yeah.
And there's uncertainty in terms of how many months is needed.
That is correct. And so basically the equation that I look at is, how quickly are we going to get testing out there? Not a vaccine, not a treatment, but how quickly are we going to get testing out there so that we can then implement a more efficient semi-shutdown of the economy. So if you're sick, you sit on the sideline, and we know if you're sick, and if you're likely to be sick, maybe we sideline you, but otherwise the healthy people get back to work. That would be as ideal a situation as I could hope for right now. But I should also say something good, because I think this has been sort of a depressing. Like, if I listened to this whole conversation, it sort of, took the sum total of what we've been talking about. Like, it's got to be sort of chilling. I would say this. One of the weird things that I noticed in studying companies that have had these sort of world-changing effects on their industries is that every one of them, and I didn't highlight this in the book, and I should probably go add another chapter to the book, because like this was a phenomenon I sort of noticed it, but I didn't really notice this until we were in the middle of this COVID-19 thing. Every one of these companies started with a terrible disaster. Okay, so Bank of America, which biggest bank in the world for a while, used to be called Bank of Italy, started by A.P. Giannini in San Francisco a year before the Great San Francisco earthquake. Okay, think about that as disruption, right?
Yeah.
So you have your entire city wiped out. Like a third of the population was homeless. A third homeless. The buildings were smoking, and Giannini, in that environment, had an innovation stack that allowed him to essentially build a new banking system. Like what you think of as banking right now, he invented literally in the ashes of a earthquake and fire ravaged city. And then you look at Southwest, like my conversations with Kelleher, like he was telling me war stories of stuff that was, unconscionably brutal, and how it created this different. Herb called it a warrior mentality, but it's and again, none of these guys wanted to be in those positions. They just found themselves in those positions, and then happened to have a skill set that really suited the circumstances. So, like I'm not saying we're in good circumstances right now, but I will tell you this: the current chaos is going to disproportionately benefit certain people. And right now, this is a crucible that will forge some tremendous innovation, and it's going to be brutal to do, but that's usually kind of how it goes. So,
what's an example? I know this is hard to predict too, but what's an example of how somebody might benefit other than medical? Like if someone makes the vaccine or the cure, that's a huge benefit. But what other than medical? Like what are some ancillary effects that you think might happen, or the Federal Reserve think might happen, or whatever?
So here's one. There's huge bias in the world. Okay, racial, sexual, age bias, all these things. And the best way to perpetuate bias is little clubs. Okay, so your country clubs, your private clubs, your just expensive restaurants where poor people can't congregate, or parts of town where folks can't get in, or elite universities where certain people don't. So if you look at the biases that are perpetuated, a lot of people are excluded because we have these social systems that perpetuate the bias. Okay, and you could cut that anyway. Like I'm too poor to live in New York, so I don't get the opportunities that a New Yorker has. Or something like that. But or maybe I'm whatever. What we're doing right now is we're destroying a lot of the fabric of those social connections that perpetuate those biases, and we're replacing them with systems that are inherently less biased because, well, they can't be. I mean, how hard is it? Like every little Zoom square is the same little Zoom square. Like it's hard for me to really get, sort of upset about somebody's skin color or where they went to school or any of that other stuff that I can't even see. Well, maybe I can see skin color. But like most of the other stuff sort of falls away. So
right, you make a good point. Like racists must be really unhappy at the moment because they can't go outside.
Right.
They're just seeing people in their house.
Yeah.
So,
I mean, it's like not in my neighborhood. Who knows who lives in your neighborhood? Like nobody opens their doors, But the point is, I think that's a huge positive thing that could come out. Like you may have a talent pool that is a little different, that looks a little different. And the reason it would look different is the same reason orchestras started to look different when they went to blind auditions. If you just sit behind the screen and play a cello, you could be female. Like the number of females in major orchestras, like shot through the roof when they went to blind auditions. It wasn't because, there weren't great female musicians. It was because there was this bias in, the people who ran symphonies didn't think of themselves as biased, but they had it. And so they had to force themselves to not know who was playing. We're about to put a blind audition in front of a lot of things that heretofore were not that way. And I think a lot of cool stuff is going to come out of that. We may actually supercharge the economy not by all this stimulus, but by just getting super productive people off the sidelines who, oh, really? I didn't know you could do that. Well, I can, so let me do it, and I'm hoping
Well,
stuff like that happens, and I'm betting a lot of it will.
yeah, and so I guess so. There's two sides of that, right? There's on the one side you have human beings that their life situations are changing, so for better or for worse, they might have to start re-innovating, start new businesses, figure out how to, make the best of this new normal. On the other side, what I wonder is how long can the Fed and Congress keep footing the bill for closing down the U.S. economy?
Nobody knows.
Nobody knows.
No,
Because
I mean,
what could happen if they can't afford it anymore?
well, I mean,
I
there's
know
no
they
question.
can always
Well,
print.
okay, so let me just put it this way: there's no question we could afford it. Okay, the U.S. economy can afford it. Now, can the political system enforce it? That's the question. I mean, there is, from just raw numbers perspective, we can absolutely afford this. We can afford to do it, no problem. Do we have the political will once things are not in a panic to do what we know we need to do? Hopefully.
What do you mean? Like what might we need to do?
So we may need to reopen the economy by using some sort of tracking. So let's say we've got testing. Okay, so now you've got testing that works really well, but you would need to tell if I'm able to work or not. And let's also assume for a second that people are not going to be good actors, and then some people who are infected and should be isolated, but don't feel bad themselves, go, screw it, I feel fine, I'm going to work. Okay, but we can't let this person go to work. So what's our mechanism for keeping them at home? Well, we have to track them in some way, which means we have to ask how much of their civil liberties we're going to violate, and how much of their, freedom we are going to take away in order to protect everybody else. And that's a decision not for economists, but for politicians. And that is a decision that can't be easily made.
But you're saying though that the Federal Reserve and Congress borrowing money that can be ongoing for more than 1 month. That could be 6 months. That could be however long as needed.
Yeah, I mean, look, yeah, I mean, we could probably go many, many months economically not well off, but viable.
And so and again, we'll reemerge in this new normal. And so I'm curious from your vantage point of having started Square, and I don't know your full level involvement at the moment, but do you see data of any pockets of the economy that seem to be, at least the mom and pop economy that Square serves? Do you see any pockets that are flourishing in surprising ways?
Well, yeah. I mean, deliveries going through the roof. There are some remote personal services that are really popular right now. Actually, a lot of therapists and music teachers are going online, and
I go to teletherapy.
Yeah.
Had this morning. It's great.
Yeah.
Never have to go to my doctor's office again.
Yeah, I mean, you don't have to read People magazine in your life ever again.
Right.
That creepy copy of People they have. But I think there's there's a handful of those that are that are benefiting. The thing that I've seen that is sort of heartwarming is we've seen a lot of adaptation of some of the tools that Square's built to support local businesses. Like we're seeing companies use our gift card program to basically take donations from their customers. So a customer who wants to keep whether their favorite restaurant's open would pre-purchase a couple $100 worth of gift cards from that restaurant. And
that's a great idea.
Yeah, and it's not just the $100, okay? It's the love letter that you get with it. Like it's the fact that one of your customers cares so deeply for you that they're willing to, take on somewhat of a economic risk and bet on your future. And, it doesn't take too many of those $100 gift cards before you feel like empowered. You don't feel alone. You don't feel like, well, my company's going to go under and I'm by myself. You're feeling like, well, somebody cares, And even if
Well,
it's
it's such a great
stranger.
idea.
Yeah.
Because it's better than using a GoFundMe just to kind of keep things going. Because here it's more like crowdfunding in the sense that you're getting a sense that these are all future customers, and your best future customers are your older customers. So this is a way of keeping that connection with them in a customer business relationship.
Yeah. I mean, and, it's heartwarming because, again, I don't think anyone at Square thought of that program, right? That was one of our customers or one of our, Square users just saying, hey, I'm going to take this tool you built and use it for something you never intended it for. It's like, it's gift cards is like a virtual tip jar. I mean, who knew? But what a great idea. Or it's not even a tip jar. It's like that, it's like that Valentine you get from your grandma that's got, a little $5 bill in there and says, love you, grandma. I mean, these are heartwarming gestures. And I think especially at a time where people are scared, that sort of connection is really wonderful. And we're seeing examples of stuff like that.
Let me ask you this, because Square is now getting involved in, some of these small business loans and so on. A lot of, and you mentioned a lot of businesses that you're dealing with are either mostly unbanked or semi-unbanked. There's a huge part of the population in the U.S. that really is unbanked. So their banking system is pawn shops for loans and payday loans, like, cash centers.
Yeah.
And, those are companies too that need lines of credit so that they can support lending to their customers. The customers come in with collateral in these days. The customers don't have bank accounts, so they're not getting the direct deposit checks. So they bring in, their last gold watch or their silverware or whatever to be pawned. They borrow money at, 15% interest rates or higher. Pawn shops run out of cash because the lines are too big to collateralize all the unbanked. Could Square kind of, because you're familiar with that sector of the economy, can Square get involved there and provide lines of credit to those types of businesses?
Well, yes and no. I mean, we do have the Cash App, which is huge among the unbanked. And there are millions of people who we know for a fact don't have bank accounts that are Square Cash users. And they're, good people. They're using our app, for the stuff they need to use it for. And we provide, certain credit services to them. We don't go as far as the payday lenders. We don't do any of that stuff. We are actually experimenting with some new lending products right now. And we actually think that the Cash App, because of the demographic that we reach, is a really special tool that we hope the government's going to use. And as a matter of fact, I was talking to the Cash App team last week because they're doing a bunch of stuff with Treasury, and Treasury's working with the Fed. So my two worlds collided again, and it was really this wonderful thing to see the government working with a tech company that's working with the underbanked. So yeah, I think it's a general yes. Now that said, I'm a Cash App user. This morning I got an email alert saying that the government stimulus checks, which a lot of people can't deposit because they don't have banking accounts. Square's now created these virtual banking accounts, so you could take your stimulus check into your Cash App. Now, if you're a person who's connected to the normal banking system, that's not a big deal, because you've got a bank account, you can receive money. But if you're underbanked or unbanked, it's a huge deal. And by the way, those are the people who are most at risk. So I'm happy that we've got those rails laid down. I mean, fortunately for us, we've been at it for 5 years. Well, more than that, but growing like crazy for the last 5.
So Jim, it's so great to, as usual, to get your perspective from both the Federal Reserve side, to get your perspective as an entrepreneur, to get your perspective from the Square side, which deals with millions of people in financial circumstances and difficult financial circumstances. And this is a trying time. So I'm grateful you had the time to spend. Oh, you mentioned just to conclude, you mentioned it was a brutal Federal Reserve meeting because of all the data. What's the actual data that people are concerned about right now? Was it too much?
It's all the stuff you mentioned. And look, when I say brutal, I mean the chief economist started off by saying, we're on a roller coaster. We knew we were getting on a roller coaster, and this is the first giant drop. And here we go. I
think I guess you're forced to deal with the data as it comes up, whereas I kind of assume when I look at this data is that the best policy is to ignore it, because as the stimulus hits, combined with the economy opening either fully or in stages, we're going to see a different kind of data.
Yes.
We're going to see 40% annualized growth instead of 40% annualized decrease.
Yeah, I mean, let's hope, right? The best hope and the prediction of the guy who I most respect at the Fed, which is Jim Bullard, is that we're likely to have a V-shaped recovery. So I don't have a strong opinion on that because I'm not into the numbers well enough to have a fact-based opinion. So I'll just echo the fact that Bullard, who runs the St. Louis Fed and is thoughtful and brilliant and non-emotional, and is not afraid to say something that is unpleasant or unpopular, if in fact that's what he believes, has said this thing that I think is pretty heartening, which is that, yeah, we're probably going to have a pretty sharp bounce back. Now, there are probably a bunch of asterisks that should be put on that statement, but
does he have a timeline where that prediction doesn't work anymore?
I have not been able to get that out of him. I asked him, and he's not rebuffing me. He's just like, we don't know yet. Like, we're looking at the data and we don't. Yeah. So, again, this is a precise man. He's very, very thoughtful.
And final question is, let's say this reopens, who knows when, 1 month, 6 months, whenever. Are you going to visit New York City, or are you going to be like, oh no, I'm staying away from New York City for a while?
No. I was there up until the bitter end, and my wife and I was trying to launch the book in the middle of SARS, in the middle of SARS-CoV-2 or COVID-19. Like I was there, and I
I remember.
Yeah, I was in town, and I bailed out on the last flight out of the city. And I love New York. I mean, my mom's from New York. I feel very at home in the city. It's a great place. St. Louis is my hometown. I'm not going to, deny that. But New York is sort of a second home to me, and I love it. I'll be back the second I can be. And, let's hope that people want to come out when it's over. I think they will. I think you're going to see an Icelandic rebound, which is people have been locked up and they're going to ready to, reschedule that wedding that they got postponed and see friends who maybe they become closer to because we now have more time to socialize with our friends. But, like I remember you invited me to your comedy club, and I haven't been able to do that, but I really want to do that. I'm not just saying that. I was like, oh yeah, I want to take my wife, but I got to get a babysitter and all that other stuff. But like that's on my list of now like super important things to do, because God, wouldn't you want to do that? And, and I hope it's smoky, and I hope the drinks are expensive, that's what
the drinks are expensive, and I'll make sure they don't water yours down because we watered down everybody else's. So
oh no,
we'll keep you going.
Beautiful. Yeah, one cannot ask for more.
Well, Jim McKelvey, again, your book, The Innovation Stack, is a very inspiring book and also a really good guidebook for today's entrepreneurs. Like, I love the concept of an innovation stack, which you describe in the book. And I really love the idea of focusing on, or at least looking at, huge underserved communities for building, the next wave of businesses. And I think that is going to be a byproduct of what happens, as we come out of this, and hopefully Bullard is right. We have this V-shaped recovery. So again, I know you're busy. I really respect the time you spent and appreciate it. And you're always welcome to come on again. I'm sure I'll reach out again. So thanks for coming on.
James, thank you so much.
AI might be the most important new computer technology ever. It's storming every industry and literally billions of dollars are being invested. So buckle up. The problem is that AI needs a lot of speed and processing power, so how do you compete without costs spiraling out of control? It's time to upgrade to the next generation of the cloud, Oracle Cloud Infrastructure, or OCI. OCI is a single platform for your infrastructure, database, application development, and AI needs. OCI has 4 to 8 times the bandwidth of other clouds, offers one consistent price instead of variable regional pricing, and of course, nobody does data better than Oracle. So now you can train your AI models at twice the speed and less than half the cost of other clouds. If you want to do more and spend less, like Uber, 8x8, and Databricks Mosaic, take a free test drive of OCI at oracle.com/advance. That's oracle.com/advance. oracle.com/advance.